Hello, Assalamu alaikum. My name is Danish Kazdar. I'm a fellow member of ACCA, and today we are going to have the fifth lecture of financial accounting. So, we would firstly discuss what is a procurement cycle. Procurement is basically the process of purchasing goods or services. Uh, why the accountant or why a person would need to understand this? Because it is essential for anyone who wants to understand the financial accounting. He needs to understand the procurement cycle. So procurement is this is a very basic process which I have mentioned here. Procurement is done through various steps. So first step is the purchase requisition, which is called per PR. In this document, the user department, the department which requires the goods or services, elaborates its needs on the document that it requires a product, and this is the quantity it requires, and it requires by X date. So after that, that PR is delivered to the procurement department. The procurement department would then float a request for quotation (RFQ) to various vendors, and based on that, it would receive quotations. Once the quotations are received, the department would make a AOQ analysis of quotation, where the various vendors would be listed and their listed prices and their taxes. All of the things would appear on that document, and based on that document, a vendor is selected. The reason for selection is also mentioned on the AOQ. Once the AOQ is completed, the procurement department prepares a purchase order and delivers it to the concerned vendor. The vendor then uh, receives the PO, and he delivers the invoice and the goods. The goods are of course delivered as per the delivery terms. तो अगर ये लिखा हुआ है कि वो जो item है वो एक महीने बाद मिलेगा, तो of course it would be delivered at that time, and the vendor would provide a delivery challan with the invoice with the goods. The company would then provide a good receipt note and as proof of receipt of goods. So this is the procurement cycle on a basic level. Of course, there is a document involved in every step of this process, and the accountant needs to ensure that the documents are in line so that he can process the check. The payment process is dependent on the correct documents which are generated at each step of this process. But there are certain procurements which cannot be procured through this process because it is time consuming. So for that reason, we have something called petty cash. So petty cash, the purpose of petty cash is to pay out petty expenses. Petty means बहुत ही छोटे expenses जो कि आप जिसको कहते हैं कि एक छोटी amount के expenses होते हैं. It could be from somewhere from 20,000 to 50,000 as well, depending on the company size. The purpose of petty cash is to pay out petty expenses through cash rather than going through the formal procurement cycle, and then these expenses are reimbursed within a certain time period, usually a month, as per the approved limit. So for example, if Amjad has been given a petty cash of 20,000 per month, he incurred various expenses totaling up 15k. Up till 29th of that month, he would submit the expense statement to finance department, and the finance department would reimburse him 15,000, so to keep his limit maintained at 20,000. So basically इसका मकसद ये है कि जो छोटी मोटी प्रोक्योरमेंट्स हैं वो पैटी कैश के थ्रू होती हैं और उसका एक लिमिट मेंटेन होती है, और द पर्सन incurring the expenses through petty cash submits his expense statement based on a certain frequency. It could be a month, it could be 2 months, whatever it is. So the purpose of petty cash is to expedite the procurement for petty expenses. Now this is a very simple question. I believe you must be aware of it. It is basically the balance sheet accounting equation where we mention asset is equal to capital plus liabilities. So if asset is equal to capital plus liabilities, then I believe option B is the correct answer. Now we are going to discuss the ledger accounts and the double entry, because in accounting to every debit there is a credit. In accounting, the business and owner are separate business and are separate business. Basically, the owner and the business are treated as separate. This is called a business entity concept. So for this purpose, there is a simple example that Ahmed starts a business. The business begins by owning the cash that Ahmed has put into it. So Ahmed has put into it 2,500 rupees. The business is a separate entity in accounting terms, and so it owes the money to Ahmed as capital. So अहमद ने 2500 रुपए डाले हैं बिजनेस में. अब उसकी अकाउंटिंग इक्वेशन क्या होगी? एसेट इज इक्वल टू कैपिटल प्लस लायबिलिटीज. सो एसेट क्या है? 2500 एज कैश एंड कैपिटल is 2500. There are no liabilities, so this would always be equal to this. So now the accounting equation is clear. Now what happens is that Ahmed purchases a market stall from Majid, who is retiring from his fruit and vegetable business. The cost of stall is 1800. He has also purchased some flowers and potted plants from a trader at a cost of 650. This leaves 15 cash after paying for the stall and goods for resale out of the original 2500. The assets of the and liabilities of the business have now altered, and at 3rd July before trading begins the state of his business is as follows. So अहमद ने जो है ये 2-3 चीज़ें बाय की हैं. एक तो स्टॉल बाय किया है. Secondly, he has bought some flowers. Thirdly, he has 50 in cash. Basically उसके पास जो 2500 थे उसी में से उसने स्पेंड किया 1800, then 650, and now 50 is the remaining cash. So his asset, which is basically the cash at bank, would look like this, and the capital remains the same. Now there is another thing. If the example is continued, if Ahmed takes a loan of 500, the entry would be cash debit and loan payable credit, because loan is a liability and a liability increase is credit. So now the accounting equation would look like this. Asset is equal to capital plus liabilities. Assets are 2500, and because he has received cash, so cash is added here 500. So total assets are now 3000. The capital remains the same, however the liabilities have increased, that is 500. So here we can see that the accounting equation is now equal. 3000 assets and 3000 is equal to capital plus liabilities. So this is the basic double entry concept which you would have liked, and I would recommend you to study this, to listen to this video again, and please let me know if you have any comments on this. Thank you, and don't forget to subscribe to my channel. And there are other videos also upcoming relating to financial management accounting, and I also intend to upload a full course on finance for non-finance, which means that course would help anyone who does not have any background in finance to learn about finance, perhaps in 3 to 4 hours session. But that would be done when I'm done with these accounting financial management courses. That video would be done inshallah after that. So don't forget to subscribe, and thank you for watching.